With a changing market, investing success requires a clear strategy and a track record of performance. If you're serious about building a property portfolio, you need to speak with Lachlan Vidler and his team at Atlas Property Group. As a national finalist for 2022 Buyer's Agent of the Year, Lachlan and his team are ready to build and scale your portfolio in any market. Whether it's financial freedom or a more secure future, Atlas Property Group is here to guide and support your personalised journey. Visit atlaspropertygroup.com.au to book in your discovery call absolutely free of charge.
This is a Momentum Media production.
Welcome to the Smart Property Investment Show, the podcast by investors for investors.
G'day, how you going? It's Phil Tarrant here, host of the Smart Property Investor Show. Hope you're well. Joining me in the studio, he's back. Very popular, this particular guest. I don't know why. He seems to come in every now and then and let us know what's going on. But he's making moves. It's a business I've been watching for quite some time. Very impressed by this. And the backstory is a really good one as well. He's got a book. Go and check it out. No doubt we'll have a chat about it today because he loves to plug it whenever he gets the chance.
Of course.
Lachlan Vidler from Atlas Property Group. He's the director there. Lachlan, how you going, mate?
Good, Phil. How are you?
Welcome back.
Thank you.
It's good to see you.
It is. I love coming back in the studio whenever I can.
Yeah, no, it's I quite liked it that you were one of the first out of the traps to say, COVID's largely behind us now. Let's get back face to face, and you get so much more zing. Yes. When you do this in person rather than looking at each other over Zoom.
Absolutely. And the microphones are a lot better in here than my ones at home, so I get to sound a bit better
This is high fidelity. You're tuning in this high definition, but this is the way we like to do it. And Lachlan, and I'll sort of point this out, and for those of you who've been tuning into this podcast for many years, you know it's pretty off the cuff. We typically just have a yarn about property with a whole bunch of different people from right across the property ecosystem. But Lachlan, and no doubt you see this inside of his business as well. I haven't looked under the hood, but I'm just assuming that it's like this. Very thorough. I actually get a briefing paper for when Lachlan's coming in. It makes my job much easier, which means I don't have to think as much. So what is it? There's some adage around sort of practices you do and blah, blah, blah. And no doubt the thoroughness of this briefing, and it's got points and A's and B's and C's. Again, it's probably to your military leaning. Your book was called?
Yeah, it's probably something to do with that. I mean, what's the saying? There's 6 or 7 P's. Prior preparation prevents something performance. But
anyway, that I can look better, I'll take it. So thank you for the great briefing. But Lachlan, you've brought someone along with you today, which is cool. We like to have these chats, and this is very much a podcast for property investors, and it's very much part of his DNA. It's a heartbeat, and it has been like that for many years, where we have a yarn to Aussie investors, what they're up to and how they're going through property investing journey. And if you think back now to how long we've been doing this and the different market cycles we've been in, you know, there's a lot of flavour of attitudes and responses to and heartache from and successes within property that property investors come in and have a chat with us. Zoe Emanuel is in the studio with us today, works with Lachlan. She's on a pathway for wealth creation through property. And I reckon she's going to be a pretty good guest, Zoe.
Thank you. I hope so. I'll do my best.
So score us so far, because off air we had a chat and you said you're a drama and a performing
arts teacher.
Yeah. Now, podcasting is probably drama and performing arts, right? Score us so far.
It's a studio.
Critique.
This is a professional outfit. I like it. I'm sitting around a desk. I've got a proper microphone in front of me. I'm feeling the vibe. It's great. You've been doing this a while. You're seasoned. You know what you're doing.
Well, what can me and Lachlan do to be more engaging and entertaining, do you think?
Oh, come on. Really?
Know what we're talking about? Probably help.
No, look, I have been listening to you for 5 years.
Okay.
I'm a bit of a fangirl.
Oh,
I'm in here going, I'm meeting the flesh and blood. So
he's real. He's not just a voice.
I'm a tiny bit nervous.
Is this what you thought? Is it as in this?
You?
Yeah.
I think
it's really funny. People go, "Oh, yeah, not really what I thought."
Well, it is interesting always putting a face to the name. I have to say.
Or the voice.
Sorry, you're right. The voice to the name. See, I'm nervous.
There you go.
A voice to the name. And I think I've seen pictures of you on the website.
Maybe.
So I kind of had a bit of an idea because I use all your tools and
that's cool.
I haven't used it very effectively apparently.
That's okay. We'll fix that up for you.
I haven't done them as well as I could. But No, I think your voice matches your body and your face. And yeah, you've got a good resonant voice for radio.
Not an out-of-body experience.
No.
Well, and the question I've got, and you know, to me, and I've been doing this for a year, but it's a great way for me to learn, right? I learn so much different stuff from different people. How much, you know, this is you drawing on your skill set, what you do for a living is sort of tonality and punctuation.
So
and
much.
Like as a skill set, because I know my kids, the skill sets I'm trying to teach them, you know, like reading and writing, they'll sort of that stuff out, right?
Yeah,
but
the teachers can do that.
They can do all that stuff.
Yeah.
But like communication, negotiation, influencing skills, how you use words to communicate and shape direction, like it's so important.
So important. And in fact, that's why I think drama is such an undervalued subject at school, because it gives you those life skills that they don't really teach you. And not all parents know about that. Not all parents are equipped in that area. So it's more than just the voice. It's actually the body. It's how you present. It's how you stand and eye contact.
Yeah.
Like a lot of people don't have that confidence. So I don't think these are natural skills that you're born with. They're things that you acquire over time. Some people are lucky that they're brought into a world where their family kind of get it and teach their kids, and parents play a vital role. But a lot of kids, they don't get that exposure. And so drama is like key, I think, for communication.
I completely agree. And I think that's going to be the competitive advantages for kids of the future coming to the workplace is, you know, the skills around coding and all that sort of stuff. It's going to be largely commoditized, right? It's
and robots and all that stuff
all
will
that
take
stuff,
over.
You know, so how can you actually have a point of difference as a human these days? But I was in a workshop session with some of our team here a little while ago, and we were talking about our editorial team, and everyone was talking about the sort of upskilling they'd like to do. And I went, you know what I'd like to do? I'd like to do some acting training. Actually, and they went, why is that? And I went, well, in many ways, that's what we do in our job. You know, if I'm at a cocktail party, you know, or if I'm a guest at a dinner or a lunch and stuff, you know, you got to be on, right? So, you know, you can learn this stuff.
You absolutely can.
And if you learn it, you get better at it. You tend to enjoy it a lot more rather than being a chore, right?
Yeah.
So you go, anyway.
Look, we're up the road.
All right,
you
there we go.
You can get some coaching.
You came in for a
I'll
podcast.
give you my card.
Yeah. You see what I did there?
Yeah,
great, isn't it?
Absolutely.
Part of the skills pay the bills. But Zoe, you're not only a drama and performance singer.
Yeah,
you're a singer as well.
Yeah.
God.
Just made an album actually with our kids.
Did you?
Yeah. Well, it's coming out. I won't give you too much away. But
all right.
Yeah.
Secret.
Yeah,
there you go.
secret.
But you're also a property investor.
Yes.
Or are you a property investor and on the side, your side hustle is this?
Not yet. Not yet.
Growing.
No,
Growing.
getting there.
So, and you've been working with Lachlan, his business, for a little while?
Actually, since 21, only a year.
Okay.
Yeah, so it's a new relationship, but I've had a great experience.
Well, you seem to get on pretty well.
Yeah, no, we
Your
get
body
along
language
really
is good.
well.
It's not, you're not sort of sitting there.
You see, you know already. You get it. Yeah, no, it's been a really good experience for me.
Okay.
And so actually, the way it all started was when I was pregnant, I was getting my ultrasound. And because I've always...
I didn't think this would start here.
I know. Look, let's go there. I'm just going to give you a little
She's
story.
a teacher at heart. A storyteller.
And the woman said to me, we were talking about, you know, how to get into the Sydney market and how it is, and being on the I was teaching at the time and my income wasn't great, and, you know, all those sorts of things. It's like, how am I ever going to buy a home? And she said, well, you rent where you want to live and you buy where you don't want to live. And I'm like, and something clicked. And then years went by. I was a single mum, blah, 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 doing my thing. And then I got to a point where my income was pretty good. I was starting to feel a bit more comfortable. My business was going well. And I found out about you guys, podcasting and listening to smart property investment. And for me, investing in property always felt like beyond my reach. It was like, how am I ever going to invest in property? But what I love about you guys is you talk about it in a way that's so accessible, you know, and it opened me up to this whole borderless idea and buying property that's not too expensive and all that kind of thing. And so the first point of contact through you guys, because I listened to the interview, was my mortgage broker.
Okay.
I'm going to give him a plug. Is that all right?
Depends who it is. I'll edit it out if I don't like him.
Okay.
Now, who is it?
It's Michael Zia, Mortgage Channel. They're fantastic. So he helped me buy my first one, just gave me a bit of instructional way to help me find the right property, and I bought a property out in Logan in Crestmead. That was great. And then my second property, I kind of thought, I might try and do this by myself. But being a business owner and all the time it requires to invest and find the right property, I was feeling a bit nervous. And so then I heard another interview with yours truly, Mr. Lachlan Vidler. Yeah.
Okay.
And I liked the sound of him because there's a lot you can tell by someone's voice, I'll tell you that. And so I gave him a call and we had a good chat on the phone. I called another company as well.
I don't know if you told me that. I don't know how I feel about that
now.
I'll ask you
there was a little bit of competition.
Yeah, good.
And I went with you. And we had a great experience. So it was like he kind of nurtured me along the whole way. He listened to what I was looking for. He presented, everything's, as you say, super professional. And I just felt really at ease. And I didn't feel so nervous about – because the thing about investing in property is you want to make the right decision.
That's the idea.
You can go so wrong. And you hear stories about people buying these properties. Like I had this whole dream about buying in Western Australia because we've done a lot of travelling around, me and my partner that I have now. We've done a bit of travelling around Western Australia and we're totally in love with it. Bustleton, Margaret River.
Not very nice areas. Margaret River.
Yeah, Margaret River. Oh, horrible joint.
Oh, horrible, right? And it's got everything you could possibly want and it's so affordable. But is it a place to invest? Because the market's so volatile. So I just was like, oh, God, what do I do? And then you're looking at Queensland again. And because there's been this incredible upsurge and there's so much buoyancy in that regional market, you can go wrong because things can drop out, markets can change and swing. And so I just feel so much comfortable being under Lachlan's wing, letting him guide me.
Well, it's nice to phone a friend anytime you need it and have a friend on side, right?
Exactly.
And it's the reason why a lot of people use buyer's agents. And, the Smart Property Investment Show, we've been very sort of vocal around this particular growing market segment. Fast forward 10 years, a lot more people will be using a buyer's agent. But, a lot of people go to me, oh, Phil, you know a lot about property, blah, blah, blah. Why don't you do it yourself? And I go, well, I could do it myself. I don't want to do it myself. I don't have the time, energy, inclination, networks, relationships, knowledge, all that sort of stuff. Yeah. So I'm happy to use a trusted profession to help me buy property, right? And I completely get it, particularly as a business owner. Yeah. You must appreciate just the value of time. Oh. You're better off spent probably working on your business and getting someone smarter than you.
That's right.
Well,
I've got to keep my serviceability up, don't I?
Yeah, true. But that's the important work that you've got to do, right? Yeah. So you bought your second property through Lachlan. And now you have so how many properties now?
I've got 3. We just purchased one actually.
We did.
Okay, well, don't give me too much away because I want to get into that a little bit later on. Yeah. But that will put you sort of into the top, I don't know, sort of handful of property investors in Australia, 3 or more properties. Because most people get 1 and 2, most people 1, and probably because they bought the wrong place in Margaret River at the wrong time, right? So the reason why most people only own 1 investment property is because they buy the wrong investment property. Is normally what happens. So we're down that pathway ourselves. This particular podcast is try and change that. And the fact that you're listening to the podcast and working on the education, all that sort of stuff, you're ahead of the curve anyway, right? A lot of people still just wait to go to a seminar somewhere and get sold some off the plan development somewhere, right? That's typically what happens, even though there is so much information out there that says probably not a good idea. Sometimes you can luck it, but most of the time you don't. So we'll get a little bit into the mechanics of your portfolio. But Lachlan, mate, it's been a little while since we got together. Markets has changed quite a lot. It's headlines all over the papers. Every news report you listen to, property's the flavour of the month. Now, a number of interest rate rises recently. We're in a rising rate environment. How long will that continue? Who knows? Can you give me some sense of the market right now? Just a catch-all, because we'll drill down into a little bit further. But how's things tracking at the moment?
Well, I think things are tracking perfectly fine. And I know there'll be some people who listen and probably say, oh, well, he works as a buyer's agent. He's got a vested interest to say that. But realistically, and I'll unpack that in a sec. But realistically, this is still a really, really well-performing time going on. And if we look around the country, there are a lot of things that still support very much, well-performing property, right? We've got, whether we look at the national level, whether we look at the state level, whether we bring it down into like regional groupings. And when I say regional groupings, I don't necessarily mean, non-capital cities. I just mean literally grouping geographical areas into regions. Ultimately, property is based on supply and demand, right? Property values increasing is supply and demand. And without sugarcoating it, we are in a national rental crisis. When you look at the numbers, we've got less properties for rent and less properties selling than we did in the period pre-COVID. And both of those obviously go towards supply. We've got a population that's increased. We've still got relatively limited migration that's going to pick up. We've got the government announcing additional student spots. We've got the government announcing additional working positions for professionals because, like a lot of places around the world, we have shortages in skill sets. To me, that continues to add to demand. When you look at the rental crisis and property managers are getting 30, 40, 50 applications for good properties, to me, cool, we've come out of COVID. The property market wasn't driven by COVID per se. It just happened at the same time. And we've got rates moving. Cool, that's going to dampen demand a little bit because serviceability drops and things like that. But realistically, we've still got a property market that can't really support our population as it stands today, let alone when it keeps increasing through natural increase, so births and deaths, and migration.
Yeah, and that's all kicking back in. We're seeing from the government intent to sort of drive growth through skilled migration. There's an impact on property. I want to get into a little bit more. We'll just go to a quick break. Stay with us, everyone. Back in a moment. Welcome back, everyone. It's Phil Tarrant, host of the Smart Property Investment Show with Lachlan Vidler, director at Atlas Property Group, also joined by one of his clients, Zoe Emanuel, and her story in property. But before the break, Lachlan, we're chatting through generally the sort of state of the market. Just to drill down a little bit more into this, because people are asking me questions all the time around this, and it'd be remiss of me not to sort of give everyone an update because it's moving so quickly. But that said, also, markets move quickly, but the general trajectory of property is always upwards, right? I don't think there's been a period of time of over 5 years where there hasn't been upwards tick in property. So, yeah, it's softening a little bit at the moment. Are you seeing sort of marked differences from different places around the country right now, or is there a catch-all slowing down of the property market? How would you give sense for the movements in different states?
I would say that there's definitely noticeable differences between locations, right? Whether you're talking like cities or, again, you're getting into regions or you go up as high as state or national. There's definitely differences. And I think that, to me, that sort of is based on each location's fundamentals already, right? If you look at, say, a regional city, maybe it's got 200,000 people, maybe it's got lots of different industries, right? So it's a fully self-sufficient area, but maybe they have had a lot of property performance, and realistically, the people at that time can't really afford to have much going on, right? So it's not dropping, it might just taper in that case. There's then other situations where things are ticking along just fine, right? Like very much fine. And we're still seeing great results from clients who are, say, going and doing a refinance, and they're still getting valuations done now, 3 or 4 months post the start of the increase of the raises, the cash rate raises or increases, and they're still doing just fine. And when we're in markets, a lot of them are still really competitive. So I guess it comes down to research, understanding what's going on, and just as it was when markets were hot, ultimately, you've got to understand why you're investing in a location. And if you do understand that, you're going to understand why it's either moving up, why it's plateaued, or why, in some cases, they are going down, right?
So what has changed sort of mostly since interest rates started rising? Anything that really stands out for you?
I would say that realistically, the biggest changes we're seeing are emotional ones. They're not actually based on fundamentals. They're not actually based on fact or anything like that. It's more people's emotions getting in the way, right? We're having some situations where we're buying properties and we've got vendors who understand that it's still a competitive market in some locations, and they drive that, right? And we've still got to pay, a fair price, right? Maybe a bit below market value or a fair price to pick up a deal. But then we've got other places where owners get skittish, and then we can sort of, for lack of a better term, exploit that and really drive home, well, hey, maybe this is a changing market, and we can pick up great deals, but then when we take it to the bank, where we're getting great valuations coming back on it. So I think the biggest thing I'm seeing is not really anything rooted in fact. It's all emotional. And that's, as most people would say, that's the best time to be buying property.
Well, that's what they're saying. It is a very sentiment-driven market. And I think people, and this is the reason why they hike rates, because the idea is that, which is counter-cyclical to most people, but stops people spending in other ways, And I imagine that's one of the impacts that this rising rate cycle has. But where else do you think sort of current future performance of property markets will head as a result of all these changes?
I think it's still an interesting time, right? I'm not gonna sugarcoat and say, it's perfect or it was where we were 12 months ago. But realistically, if we look to, we're almost October now, aren't we? If we look to sort of, June, July, August, September last year, there were still vocal people saying, oh, we're now at the end of it, right? And then it went on for another almost 12 months. And then here we are now. And, well, I can tell anyone out there are still places performing really well. So I think, where are we heading? There's going to be sentiment concerns for as long as the cash rate continues to move, because that naturally makes people skittish and that naturally will dampen some demand. But as you sort of alluded to earlier, we might be at the end of these 50 basis point or 0.5% increases. We might now be at an end of that, right? We might now decrease to 25 basis points, maybe 30 basis points, but starting to come back. And the Reserve Bank in their monthly minutes have indicated that as well, that things are changing. I think once we get a bit of stability, which most people are expecting towards the end of this year or start of next year, sentiment will even out. Property investors are emotional, despite what they might say. So once any emotional concerns get pulled out, which will probably, in my opinion, happen once these movements start to stop or normalize, we're then going to come back to ultimately the fundamentals, because the emotion's now been taken out of it. People will now go, all right, let's look at facts and figures, because we don't have anything else to rely on. And they'll look and they'll go, well, hang on a minute. We are still in a rental crisis. We are still in a supply shortage. We are still in a very high demand period. And we've got mass migration coming that's going to add to that as well. So I think a lot of people are really expecting that come maybe even this time next year, we could be in a very general national upward trajectory again.
Yeah, and this is a tough one with property, because everyone sort of gets out the crystal ball and gazes and stuff. And I tend to agree with you. I think this cycle, we may get another 50 basis points, who knows, but it will start to taper and there will be a ceiling, right?
Of course.
And most people invest within their heads, within what's in between their ears. And you'll see with property investors, as soon as that ceiling takes place and how long it stays at that ceiling, whatever that number is. And I bet you as soon as you see a negative movement on interest rates, markets will light up again. And that's just the nature of property and what happens. But it's all about making smart decisions right now. And Zoe's chosen to use a buyer's agent, like a lot of other Australians, to support them on this journey. What are the two sort of pillars, do you think, for buyer's agents right now in ensuring their clients can get the best outcomes?
Well, I think a lot of people go to a buyer's agent, and to be honest, they can have some unrealistic expectations. And people do have a short memory, and they look at the last 2 or 3 years and they go, oh, if I'm getting less than 10%, it's a fail. If I'm getting less than 15%, it's a fail. Realistically, I mean, I can quote a data point here. The Reserve Bank in 2015 did a 30-year time series study on property prices, and that's a few years ago now, but it's still a pretty solid number. And they said that nationally prices moved 7.25% each year, right? Of course, that's 30% some years and 5% or 2% others, but averaged out annually to 7.25. CoreLogic did a really, really good piece maybe a month or two ago now, and they also went and did some data analysis on the last 30 years. And I think that they said that their number was around 6% odd.
And this is compounding, right? So,
compounding, yeah.
Did you just want to explain that to people quickly?
Absolutely. Well, so the difference in property or any asset that compounds is that you can earn growth on your growth, right? So if you've got a property, it's 500K, you get 10% growth. At the end of that first year, it's worth 550. If it then does another 10% the next year, it'll go up 55K, right? So the first year only went up 50, second year it goes up 55. So that extra 5K that you earn from compounding is like interest on your interest or growth on your growth.
And that's what they try to teach us when the Commonwealth Bank tried to sell us Dolomite accounts back in school, right?
Yep,
the beauty of compounding. And some people call it the seventh wonder of the world, right?
Yep.
Compounding interest, right? Or compounding growth.
100%.
Yeah.
But
you just don't want it on your credit card.
No, definitely not. Absolutely.
And bad.
You want it the other way.
And it also hurts your borrowing capacity, doesn't it?
Exactly. Yeah, no credit card debt, thanks.
Yeah.
But yeah, so I think that ultimately property has long-term demonstrated performance. But when you're in any market, whether it's a really hot market like it was last year and to an extent the year before, or whether it's now where, to be honest, we're moving back to normality, there's two things you got to do as a buyer's agent, or two things you got to look out for when you're looking for a buyer's agent. First one is you obviously want them to make money, right? That's a given, right? You go use a professional, particularly in your finance or investment space, you're expecting them to be there and help you make money. But the second point, which is what I think a lot of people really forget, and it's a lot of people chasing the new shiny toy, whatever it might be, and for us, new shiny toy is new locations that really don't have anything long-term to justify long-term performance. The other thing that you've got to look out for, or a buyer's agent's got to do, is they've got to ensure that they're not losing you money either. Because it's all good and well to get 20% growth, but then when you lose 25, 30, 40%, you've lost everything anyway. And, not to call any one location out, but for example, Perth, right? Lots of different areas of Perth. I'm not saying that they've all done this, right? But a good number of areas of Perth, if you go back and you look at the data 10 years ago, like right now, median price, you look at median price today, most of them are only slightly above that now. Peak of the market was 10 years ago there. It dropped out. And, I'm not saying Perth isn't a good place to invest whatsoever. It obviously depends on your circumstances and your strategy. But generally speaking, what's the value of making money if you then lose it for the next 10 years? So I think a lot of people need to remember, buyer's agent, whether you are one or whether you're using one, first rule, they've got to make you money. But the second rule is they've also got to make sure they don't lose you money.
And to that point around most property investors only own between 1 and 2 properties, there's a good reason why, because the point you made then, they could have bought in Perth 10 years ago thinking that it was a great time to buy, and they've just been lumbered with a property which has probably been bleeding cash flow and given no capital growth. Imagine if they put that money elsewhere in a market that actually went up 30% over the last 2 years, right? So this is how buyers agents can help you out. They should be sort of, putting you to markets which should be meeting your needs. And it's either going to be capital growth or yield or both. It just depends on your circumstances. But there's a lot of people who have been, inverted commas, sold into property by a, inverted commas, buyer's agent who's recommended, who weren't really a buyer's agent. They were really a project marketer or a property marketer who was probably getting paid a commission to sell a particular type of asset somewhere else, right? That they are not buyer's agents.
No, not at all. And the one question I'd say to everyone to ask is, how are you getting your money, right? Ask your buyer's agent, how are you getting your money? If the answer comes from anything but them, it's a warning sign. Now, that's not to say people can't take, buyer's agent can't take a bit of a clip from, say, a mortgage broker or somewhere else, but that's a warning sign, because you've now got to start thinking about, okay, if they're getting money from anywhere else, is there maybe a bit of a vested interest lying in some position other than me?
Yeah.
And you've got to understand that. But 100%. There's a lot of locations that people have been sold into by developers or property marketing specialists or even some buyer's agents, unfortunately. And what I say to everyone is, tell me why it's going to grow. You tell me why, and then sure, fair enough. But don't just buy somewhere because it looks cheap. Don't just buy somewhere because you think that, it has to go up because everywhere else has gone up. And I know we've got to move on to a couple other things, but the last point I'll say on it is 2 years ago, 3 years ago, you could buy some pretty solid properties for $300,000, right? And I'm talking houses here, right? Units and townhouses are a different story, but you could buy pretty solid houses for, maybe $300,000. Now, those markets, now $400,000, $450,000, right? The markets that are now the 300s were the 180s, the 200s, the 250s. And the thing is that people haven't shifted their expectations. So now they go, I've got $300,000. Where can I go? I'll go here because I can buy it. But those places weren't good buys when they were 250, and they've gone up. That's fine. But if they weren't good buys when they're 250, why would you just want to spend more money to get another place that's still not good just because you feel that you have to do it, right? Maybe just save. Maybe just wait. If you wait a year, but you buy in a place that's 10 times better, you're not going to regret it.
Yeah, it's okay to wait. And Zoe, your property investing journey, when you hear Lachlan sort of talk about this current market, which you're going to go, oh, God, there's a lot of reasons why you probably wouldn't get involved. But then on the flip side of that, back in this sort of period when prices were really rocketing, people are going, well, I can't get in there. Why would you get involved in this? So volatile, right? So there's always a reason why not, and why not to get in property. So for you, like choosing to become a property investor, was it a wealth creation thing? Was it a, I'm planning for a retirement thing? Was it a just want some more bucks in my back pocket type of thing? What's the origin of it all?
Well, for me, it was a security thing.
Okay.
Yeah, because I never got to buy. I rent in Sydney. I now live with my partner, so I don't pay rent anymore, but I live in his home. But before that, I was renting. And for me to get into a bank wouldn't lend me the money I needed.
Because you're a business owner.
Because I'm a business owner.
Yeah.
And a single mum. And it was really hard to get anyone to lend me the money I needed to get into this Sydney market. And so I had to think outside the box, and that's where you guys really helped me, because it made me see the possibility. But before that, I wouldn't have thought to buy outside of Sydney or New South Wales. I would have been like, I don't know those areas, don't know anything about it. Like, how do I do that? But for me, it was kind of like, this is the way in. And I think, the whole thing about the smashed avocado and young people can't get into the market, I think that's actually really detrimental, because it puts the mindset into young people to think, oh, I'm never going to get into the market. No, you can. You've just got to think a little differently.
Yeah, I agree with that, and I've sort of been quite vocal on this show talking about that stuff. I've even had Bernard Salt, who's the guy who's behind the avocado, Smash Avocado, saying, and it's absolutely true, you know, and you get beaten up. Like Gen Y aren't that young anymore anyway, right? Like they're starting to turn 40, you know, so they're not young deadbeats.
Whippersnappers,
right?
yeah, exactly.
You know, they're the biggest, one of the biggest cohort of generational Australians. But this entitlement saying, well, I can't get into the market because it's too expensive. Well, maybe you shouldn't buy your first home where you grew up with your parents, which is worth $5 million. Yeah, there's probably a good chance you can't get into that market.
Exactly.
You got to think differently, and your circumstance is very similar. But being a security, and I think you've framed that really well, it's a security thing. A security means a whole bunch of things to different people at different times in their lives. And security is something which is, you know, as a family orientation, it's security is something which can be transitional generationally. People have done it for many, many years. So thinking differently and, you know, getting the value of investing in property first, irrespective, might not be where you want to live, but if it makes sense, what Lachlan's saying, get stuck into it. So what's the long-term plan for you with properties? Is 3 properties enough?
We were actually just talking about this.
You're going to go again?
I'm going to go again.
Oh,
yeah.
Well, once bitten, yeah.
Oh, I love it.
Yeah.
I love it.
Yeah.
We bought this one. We haven't even finished. We haven't settled 100% yet. 4th of
Yeah.
October we settle.
Okay.
I settle. But it's a team effort. So.
It is a team.
So we settle.
Should be we. Should be we.
You know, all the work comes from
Should be
Lachlan.
him. Blame him.
Yeah, exactly.
If everything works out, you say you've done a good
me.
job.
Yeah.
If everything's gone wrong, blame him. It's just
Totally.
the way it
I'll
is.
point the finger.
But let's have
and
a
I
chat
won't
about.
come back on.
No, we're talking about, you know, this sort of notion of security. It's a mechanism. You know, the product of doing this really well is security. And security gives you choice often, and that's why people go, oh, well, yeah, I want to retire and all this sort of stuff. Let's talk about the assets themselves. So one property that's sort of in this period between exchange and settlement right now. What's the first property? Can you tell us
My
tell us
first
about
one was in a place called Crestmead.
Yes.
Which is the Logan area. I got that with the help of my
Your
mortgage
broker, yeah.
It was a 3-bedder, you know, double brick, 600 square metres, old inside, like it's sort of nice because I've got a pink kitchen.
Oh, nice.
Picture that.
Yeah.
Mauve walls.
Fancy.
But I've never done a thing to it. But yeah, so that was my first buy. And then
How much you pay?
$289.
Okay. And you did this your broker, $289.
Yeah,
And
yeah.
what are you renting that out for now? Do you know?
$370 a
okay.
week.
$370 per week.
Yeah.
And did you go in sort of 80%,
Yeah.
20%?
Yeah.
On it?
Well, that was my first place, and I had $100,000 deposit.
Oh, it's huge.
Yeah.
Did you plug the whole 100 into it? Don't know. Can't
Yeah, I
remember.
did.
Wow.
Yeah, no, I did.
So you had a really low LVR or lowish LVR loan.
Yeah.
Okay. Would
Yeah.
you do the same again now?
I don't think I could save $100,000. That's why I'm doing this, because
Yeah.
I'll use the equity, thanks. I don't want to have to do that again.
Okay.
It was, I mean, you know, it was doable, and I was in a position where I could, and then, and I came into a little bit of money. Not much. I think I came into $20,000 from my
Okay.
grandmother, so
Yep.
that helped.
Sweet.
That kind of pushed me over the line, and I sold a grand piano.
Well, there you go.
So that gave me, I think that was an extra
So
35.
you're compromising your creative capabilities for security. Is that a good trade-off?
What do you mean? How am I
Giving up-
compromising it?
Giving up your piano.
Oh, right. Yeah, well, these days I didn't have room for it in my studio. It was too big.
there you go.
So it's a keyboard these days, and you can get really good keyboards that sound
Same
like
thing.
Yeah.
Okay, so Crestmead number one. So the second property, which is when you sort of ran into Lachlan?
Then listened to this, heard Lachlan, spoke to him. I really drilled him about his education because I wanted to understand, you know, what was his knowledge.
Has he got enough degrees for you?
Yeah, I think he does. And, yeah, because I'm an avid listener and I do my own research, I sort of, we threw around a few areas together and knuckled down on Bendigo.
Bendigo.
Yeah.
It's where they build the Bushmasters.
Yeah.
Certainly do.
Yeah.
Yeah, and I actually haven't seen that property. I haven't been there.
Still been there. See, a great
still haven't
advertisement.
been
A
there.
great advertisement for you don't even need to visit them. And
No.
you've already pulled equity out of it.
Yep,
So-
already after a year.
Really?
it's
So what'd
done
you buy? House?
Same thing. Yeah, 3-bedder, brick, I think that was, I can't remember what the square meterage on that, but it's close, similar property.
600-700
Yeah.
meters squared, I'd say.
How much did you pay?
I think it was $379
So did you draw the equity out of
my
Crestmead 1 into it?
There you go.
Yeah.
Everyone go stalk.
Yeah.
Might have to edit that out.
I completely missed it, don't worry.
I went, I pulled the money out of that one.
Okay.
That took a while to gain momentum though. That plateaued for about 5 years.
And I guess, you know what, that's probably a really good one to touch on because you bought that in Brisbane, right? And Brisbane, between 2010 and 2020 or 2011 and 2021.
Not a lot.
No, it was, I can tell you the number, it was 22% over 10 years.
Okay.
Yeah, and because I did this for something else.
Absolute growth, 22%.
Yeah, absolute growth, it was 22% over that period. And it's a really good point to stop on for a sec because I think it really goes to understanding why markets are going to move. And Brisbane had a lot of indications that it would. And a lot of people bought into the market, just like Zoe. I mean, I even bought in there, right, at one point and had a property that didn't do too much over a little period. And realistically, it's just that great example of you've really got to knuckle down and drill down on why it's going to grow and really be sure of that because a lot of people, you know, if you were, say you were 30 and you bought in there, you're now 40 and you've only had 20% growth. And that's almost I don't want to be a bit dramatic, but that's almost a lifetime of growth that's just been
wasted decade.
Absolutely. Yeah. And a lot of people felt that. And yeah, it's caught up now, that's fine. But imagine if you bought, kind of like what we did with you, Zoe, you bought a year or 2 years later, you'd bought effectively, you pull equity. In that 10 years, you could have bought 4 or 5 or 6, or to be honest, because that was a really great time period for borrowing as well. You could have built an entire property empire in that time, but you didn't. Yeah, you know.
Yeah.
Well, not you. Sorry, when I say you didn't, I mean
no, it's okay.
Generally speaking.
The colloquial we. Yeah.
That's okay.
Yeah.
But no, I think that's spot on. And for me, I was like, well, I can do this myself because, you know, I can look into, I mean, your website alone gives you that whole, you can plug in a suburb.
Oh, yeah, gives you all more data you can poke a stick at.
Yeah. So I can do all of that. But there's so many intricacies to it that really someone like me, you need time, you need knowledge, you need the relationships with you know, property people.
Yeah.
All those people out there that are in property. And, you know, when we're talking about my next property that I've just got, which is in regional Queensland, I wouldn't have picked that area. I wouldn't have known, oh, that's a great area to buy in. It's kind of a new market that's, I think.
Are you going to tell us where it is? Are you cagey on it?
No,
cagey.
I saw that.
Yeah,
I saw that regional Queensland.
Yeah.
I'm an open book, but I'm I'm going to keep I've given you heaps of info already.
We'll keep that one under wraps. But look, I wouldn't necessarily say it was a new market per se, just so people don't think we're buying somewhere that had like 20,000 people. It certainly wasn't. But I think it really probably goes to the whole idea that if you're not in this doing it every day, and like whether that's because you work in property or you might have the time because you're retired from something else or you just don't sleep, if you're not researching and investigating and understanding all these places, you could miss out. And realistically, not to jump the gun on it, but, you know, we bought this for just over $400,000 for you. It's a really great buy. And I think, what do we work out? It's probably 30 or 40K under value on this one based on the area. And it was, I think it was an off market, wasn't it? Yeah. It was an off market and we got a good deal on that because we were able to meet the vendor's requirements that wasn't just price. But if you're not in it, you might not necessarily look here. And this is a big place. Like, it's got hundreds of thousands of people. But again, you've really got to have your finger on the pulse, because otherwise, if you just bring up Google Maps and you go Australia,
there's a lot of choice there.
Absolutely.
There's a lot 100%. Of choice. Yeah.
So you refinanced, or you pulled equity out of the Bendigo property to facilitate?
I pulled out of both, actually.
Okay.
So ultimately, my one in Logan is performing for me. It's giving me cash. It's a bit of a cash cow now, but it took time.
Some time.
Yeah, but it's still been a valuable property. But it didn't perform like my Bendigo one gained really, really quickly, and it was like, oh, this is how it goes.
And you bought that, or technically you bought that at 105% because you pulled equity to do that. But in terms of the physical loan against that asset, it was 90%. So for you to then be able to go and pull equity out of that, it had a lot of growth that came out of it to bring you down to 80 and then get you below 80 so that you weren't then hit with LMI for a second time.
Exactly.
What valuation did you get on the Bendigo property at the point of refinance?
I think 60 or something, I think.
Yeah, I think we did the maths. It went up about 25%, 30% in about 9 months or so, roughly.
And you think because you bought it well?
Well, absolutely, because I'm the first to obviously blow my own trumpet if we're
go on
if we're doing well, but
go on.
But realistically, the market itself didn't move that much in the time period between it. So the only thing that it comes back down to is, one, we did buy incredibly well, and two, we bought with the right circumstances around it. So it meant that while effectively we outperformed the market on that. So everywhere did well, right? Like I'm not going to sugarcoat it. Everywhere did well. Bendigo did well. A lot of other places did well. But when you outperform the market, and to use a financial term, that's the alpha, right? The alpha is what you can't really chalk up to anything else other than the individual performance of, the investment manager or something like that. So realistically, it means we made an alpha of probably between 8 and 10%, which is fantastic, right? That's actually really, really good long-term performance to have as a buyer's agent, right? I might not technically be an investment manager like the share market, but that's the way that I like to look at myself.
Well, it sounds like textbook stuff, right? And the idea is that by being a buyer's agent, you can subscribe into that and you get it right more than you get it wrong. And stories like that are great. So you settle in a week or so's time on this regional Queensland place with over a couple of 100,000 people going and have a dig around.
Yeah, exactly right.
Good luck. Do they sort of have a lot of Bundaberg rum around that area?
You know what? They actually don't. Well, actually, no. You know what? They probably do.
Yeah.
But not distilled around there.
A lot of Forex though.
I was going to say.
Absolutely, there's a lot of Forex.
Well, that's really cool. So let's go a quick break because I want to know what's next as like goal setting for you. Stay with us, everyone. Back in a moment. Welcome back. It's Phil Tarrant, host of the Smart Property Investment Show with Lachlan Vidler and one of his clients, property investor Zoe Emanuel.
Yeah, that's it.
So what's next? Because this is pretty important, like, you know, sort of creating a pathway for your property investment journey. Sounds as though you're not stopping. You're sort of going forward. So, goal setting and stuff, rather than talking about generally, it'd be good to talk about in the context of using your journey, and the outcome you want is security and whatever that. And no doubt, this security equation for you will change over time. Security always changes as your life changes. One of those things. Property investment being an enabler to supporting positive change, and for you and how you frame security. It's cool. So there's more to come. How are you going about sort of setting goals around the future? Is there an end point? Is there an end amount of money that you want to make through property?
Yeah. No, I haven't thought about it to that detail, but there is an end point because, I'm not going to give you my exact age because I'm a lady, but I am in my late 40s, right? Yeah. And I don't want to be working past 65, and so for me, I'm thinking about my retirement. I'm thinking about how can I have a comfortable, last 20 years of my life or whatever. So I think 4 to 5 properties maybe. Okay. We were talking about potentially then looking at a commercial property after that. It all depends on my serviceability, obviously. So I'm really concentrating now. My focus is on building my business and making it really successful and making my income, because that's kind of key. If you can't get the serviceability, then you can't keep going. So that's the challenge for the investor, especially if you want to buy more. But I can see the value in keeping going, and they do say you want at least 4, don't they? Is that the key? Or?
It all depends. I'd probably hand that over to Lachlan.
Yeah. Well, I mean, look, I think probably with your circumstances, for you, we've known that we've wanted to grow the portfolio. We obviously have a bit of a method, regardless of the endpoint you want to get to. We've got a bit of a method on how to get you moving along that path, and then just the scale of it is what tends to vary. But I think it's a really good point for a lot of people out there. You don't necessarily know, your passive income type goal you want to achieve, and that's okay. And as we sort of buy another one, we sort of re-look at where we're at. We buy another one, we look at where we're at, and it's very iterative. And I think that that's good for you because we know that we know that method and approach we're doing. We stop, smell the roses. All right, we're not there yet. let's go again. All right, cool. We're now sort of at, say, that really foundational point. You got that safety, that security. What do we do now to bump it up? So for you, as your business matures, as your portfolio matures, as your life expenses change and things like that. Like, as you said, you're a single mum, as your daughter becomes more self-sufficient, things like that.
Mate, get her working at Macca's quick.
It's, it's one of those things that, you'll really come in and be able to go, all right, my number's 50K, my number's 80K, it's 100, it's 120, it's a million, right? Whatever it is. And it's that really iterative process, which I think a lot of people pressure themselves to go, 100K is obviously the magic number everyone throws around, right? But everyone goes, I need this, I need that, I need that. And they're 30, 20, 30, 40 years away from retirement. And a plan's great. And I love a plan. But if you don't know, you don't need to stress yourself out either. You can just follow the ball and get there.
Well, that's how I'm kind of going with it. To me, it's like, I know there's an end goal. I don't know exactly what those figures are because it's such an unknowable in a way.
Yeah, I completely agree with that. And you can't overcook it because people get obsessed by it all and they typically make bad decisions as a result of it because they think they've got to hurry up. I'm a huge proponent of strategic patience, and it's, if you're just doing the right stuff, you got to let time do its thing, right? Just let it happen and don't obsess yourself too much about what's going on in the market right now and, my property's gone back by a little bit and like, who cares?
Exactly.
It's
going to go up and down, isn't it?
It's going to go up and down. You just got to take it easy, and it's important that you're sounding it out and you're chatting to people, right? Are you still using the same mortgage broker?
Yeah.
Yeah? Okay.
No,
cool.
He's great. We've got a great relationship. And I have to say, I think for me, having a good team is crucial because I've only got so much knowledge about these things, and if you've got people around you that know what they're doing, you just feel
and you want them acting for you, right?
Yeah.
And I know you sort of subscribe into this, Lachlan. The idea of people there's a lot of vanity around how many properties you have, and I tell you, when you have a lot of properties, it's just a big headache.
Sure is.
Be careful what you wish for. So you're better off having not a fat portfolio, but a fit portfolio, and often less properties that get you the same result is better than 100%. More properties that get you the same result.
100%.
I like the sound of that.
Yeah, absolutely.
Not a fat portfolio, but a fit.
You like that?
I like it.
I just made that up on the fly.
That's a quote.
Yeah, you can have that if
Put
you
that
want.
on your website.
Yeah. Everyone's property.
Don't
be a fat.
Not fat fit.
Not fat fit.
I love that. Maybe we can team up with like a PT.
There you go.
Firm or something. And,
there you go.
Really
same logic.
Yeah, absolutely.
Same logic. But,
momentum, personal training, something like that. And then,
Oh, it's a brainstorming session.
It is. So less is more.
Less is absolutely. And I mean, but
a lot of different ways to skin a cat, right?
There is a lot of different ways to skin a cat. And I think what people need to understand, though, is that there is a way to build a portfolio these days, right? The gone are the days you can just negatively gear, banks just give money. There is a way that you've got to build it out these days to sort of get you up there. And again, as I said before when we were talking about you, Zoe, there's a method and then it's just the scale of that varies, right? So, at one stage you might do 3 properties of a certain type for one person, but for another, if they're trying to go bigger, they might need 5 of that type, right? Or whatever it is. So I think that it's important for people to then remember that the journey is going to change, right? You might start, you build. You could end up with 10 properties, but then you might then downsize, right? And it's not about going, I only want to buy 2 properties now and that's going to be it for life. Because red hot tip, unless you're only looking for, maybe 5 or 10K of passive income, 2 properties isn't probably going to get you very far. Or you're going to be so negatively geared, you're going to buy 1 property every 10 years, which also isn't really sort of what you want to do. So yeah, it's about understanding that there's stages of a portfolio and, you'll for most people, you'll buy, you'll get up there, you'll then sell a bit, you might buy some more, and then eventually you'll downsize it, right? You'll move from that fat to that fit. And that's sort of the way it kind of works, right? You don't need to build Rome in one day. You don't need to buy your first 2 properties and then your only 2 properties. It changes and it develops. And for a lot of people, there's outside factors, right? Government regulation, personal circumstances, financial issues, right? There's so many things that then impact it as well. So don't try and run your marathon with your first property or 2 properties.
Sage advice from the man himself.
This is why I chose him.
Vidler. It's good. Well, you seem happy.
Yeah, I'm very happy. Yeah.
We'll do a real estate exposed session at some point. When you become less happy, come and have a chat. We'll give him a hard time.
Obviously, that'll never happen.
Well, you know us now, so
yeah. Thank you for having me.
Looks like the we is on a good journey together, and I think you've made a very smart decision by trying not to do it yourself. You talk about teams and your team's got to be right for you as well.
Yeah.
You got to find the right people to work with, and there seems to be good chemistry here and it seems to be working out. So once you get this one cracked and go again, you'll have to come back on and let us know what's going on.
Love to.
That'd be good.
Yeah.
We want to get more female people onto the show.
Oh, really?
Female people, is that even right?
No, I don't know about that.
Yeah, females. We want more girls on the show. I'm allowed to say that. Ladies on the show.
Yeah.
And we love to tell those stories because in many ways the heartbeat of property investing in Australia, but for some reason we always end up with guys on the show. So if you're tuning into this, please get in touch with us. Come and have a chat with us. We want to get more ladies on the show. Absolutely. It's pretty easy, isn't it?
It's great fun.
Straight fun.
And you know what? We haven't really said it, and I don't know if I've ever said it to you either, but, you're maybe trailblazer is a bit strong, but
here we go.
Females are really underrepresented in finance and investment and things like that. And it is a really big problem, and education is really helpful to push that along, and obviously using professionals can help with that too. But realistically, not only are you in the top 4% of property investors, but as a female, I think that that's even more impressive. So I think that, for a lot of people, you could be seen as just, somebody to look up to.
Yeah, there you go.
Well, thank you.
Just copy Zoe. She knows what she's doing.
Absolutely.
No, but I'm absolutely serious. Get in touch, please. All the ladies out there, come and have a chat with us. We'd like, if you can come in, singular, together, however you want to do it. I'm happy to do a panel of female property investors. I really do enjoy it. Get in touch with the team, editor at smartpropertyinvestment.com. Zoe, thanks for coming in.
Thank you for having me.
Stay in touch. Let us know how you're going. Sounds like you're on the right pathway. Lachlan, thanks for the introduction as well. It's always good to get investors on to have a yarn. It's good. Good episode. Hope you enjoyed that, everyone. Remember, smartpropertyinvestment.com.au, editor at smartpropertyinvestment.com.au will be picked up by Grace, our editor of property investment and property here at Momentum. And she's also championing a lot more ladies on the show. So we're expecting that email box to blow up with interest to come and have a chat with us. Social media, Smart Property HQ is where you'll find us. We'll see you again next time. Until then, bye-bye.
The information featured in this podcast is general in nature and does not take into consideration your financial situation or individual needs and should not be relied upon. Before making any investment, insurance, tax, property or financial planning decision, you should consult a licensed professional who can advise whether your decision is appropriate for you. Guests appearing on this podcast may have a commercial relationship with the companies mentioned.
Would you like the latest news and insights in HR, leadership and people management? HR Leader has you covered. Subscribe at hrleader.com.au.